Hi, a very good evening to ladies and gentlemen. Thank you so much for tuning in on time for our webinar today with the title of Navigating Q4 Forex Market and Spotting Key Opportunities. My name is Junkit from Phillip Nova, and today we have a speaker from Trading Central, the expert in the field that we are talking about today, to share with you his insights and the opportunities that he spots in the Forex market for the Q4 for the year. And before we continue further, this is a standard disclaimer that we have to share that anything that we cover in today's session, it is purely for educational purposes only, as we don't take into consideration your personal investment objectives, your risk appetite, and your financial situation. So we do hope that through this session, we are able to provide you value in terms of the analysis that Trading Central has to provide, and hopefully to aid you in your journey of trading Forex. But before that, just to give an introduction of who we are, for those of you who are new to Phillip Nova, we are actually a member of Phillip Capital Group, and we were inaugurated in 1983. And we are also one of the founding clearing members of the Singapore Derivatives Trading, SGXDT. And since then, Phillip Nova has grown to become one of the region's top brokerages for trading of stocks, CFDs, Forex, futures, commodities, and more. So in short, we are a brokerage firm licensed by the MAS, and we provide trading for various kind of product for stocks, futures, options, FX, CFD, everything. Okay, and we also are a clearing member of 21 global exchanges. As today we are actually talking about Forex, right? Just to give you an introduction, that at Phillip Nova, we mainly have two trading platforms for Forex. First is the Phillip MetaTrader 5, which is a fully zero commission trading platform for FX, CFD, and precious metals. So this is actually a award-winning and preferred platform for those of those traders who would like to trade more on the FX and CFD. On the other hand, we also do have a in-house proprietary trading platform called the Phillip Nova 2.0. So this is the platform that you can trade multi-asset in a single platform. You're able to buy stocks, you're able to invest in ETF, and at the same time, you could also trade leverage products such as Forex, CFDs, futures, and also options. Okay, so that is a brief overview of who we are and what are the platforms that we offer. So next up, just to give you an overview of the rundown for today. So today we are looking at the Forex market, and we'll be spotting the key opportunities for Q4. And in the first segment, we are going to walk you through a Trading Central tool that we have on Phillip MetaTrader 5. So these are the technical tools on the platform that you are able to use, and it will significantly improve your trading experience. Next up, we also have the overview of the Forex market in 2024, followed by some of the key drivers for Forex market this year. And also our speaker for the day, he'd also be sharing with you his outlook on the Forex market. Then we would have an interactive Q&A session. So throughout this session, do feel free to make use of the comment section, the questions area, to drop down any questions that you may have. Okay, then at the end of the session, towards the end, our speaker would be addressing your questions one by one. And do stay till the end, whereby we will be sharing with you a promotion that is exclusive for those of you who are tuning in online. Okay, so next up, without further ado, shall I introduce Rebecca, who is a client success manager at Trading Central, to share with you this tool that we have on Phillip MetaTrader 5 that you could download as a plugin. And Rebecca will share with you how you could significantly improve your experience trading Forex and CFD with this tool. So Rebecca, over to you.
Thank you for introducing. So, welcome everyone to the Phillip Nova webinars with Trading Central. Perhaps you can make me you can make me the organizer. Perfect. And this is Rebecca, and today I would like to take this opportunity to briefly introduce Trading Central and show you where you can find a with Phillip Nova and how you can use it. Now, Trading Central was founded by a team of experienced analysts in 1999 in Paris, and now we have a team and a license globally. Our indicator plugin is designed to help traders to make profitable decisions, and it's a unique indicator which allows traders to see Trading Central's levels and strategies directly on the live chart. Now, once you are on the Phillip Nova webpage, once you go to the platform and go to Phillip MetaTrader 5 Suite and click on TC indicator setting for Trading Central, you can then download the Trading Central indicators over here. Once you have downloaded and installed the plugin, we should be able to find Trading Central indicator on the left hand side of your indicator list. And I would recommend you to just drag and drop to see the analyst views on the right hand side. And once it's being loaded, you can then see what is the analyst kind of preference directly. Now, green means is declining, is kind of a bearish trend, and green is for a bullish trend. For this particular stocks, Forex pair right now is declining, and you can see what's happening here, and also with the different kind of pricing as well. Now, once you can see this, you can use this as different kind of time frame as well. We normally use 30 minutes chart, but you can always use 4 hours or a week if you want to see like a different kind of time frame. And we always recommend you, to drag and drop and check with the candlestick as well, where different kind of 16 kind of patterns will be directly shown in here, where you were able to find what is the kind of candlestick bullish or bearish on here directly. And if you double click on the expert advisors, you can also find what is the kind of different kind of features idea and different kind of tools that you can find on here. And then you will be able to find once there's a plug, there should be a pop-up showing. Then you will be able to find different tools that allows you to see what are available on the kind of feature ideas and different kind of ideas that you can find. So these are very interesting tools, and I would definitely recommend you to try this out and really download this directly and see what is our analyst kind of view directly on here. Okay, and thank you for your time. Next, I would like to pass it back to Junkit and for the webinars. Thank you.
Okay, thank you, Rebecca, for the sharing. Right now, I would introduce to you Ming. So Ming is actually Trading Central's Deputy Head of Research, and he graduated from the University of Hong Kong with a bachelor's degree in engineering, and he's currently a responsible officer registered with the Securities and Futures Commission of Hong Kong. He has been engaged in translation and research operations in the financial services industry for over 10 years, and in Trading Central, he specializes in technical analysis of stocks, foreign exchange and commodity markets, and with a goal of providing customers with independent and superior market insights. Okay, so with that, I'd like to pass the time over to Ming. Over to you. Hi, Ming. Are you? We can't really hear you at the moment.
Can you hear me now?
Yes, fantastic. We can hear you
Oh,
now, and we look forward to hearing what you think of the market for the Q4 2024. So over to you, Ming.
sure. Sorry for some technical glitch. And thank you, Junkit. And welcome, ladies and gentlemen. And we thank um, Phillip Lover for giving this chance for us analysts to share our market observations with their clients, with you. and good morning or good evening, depending on where you are. So I'm Ming, and okay, I think you can see my screen, right? Lovely. Disclaimer, this is me. And yeah, this is Phillip Nova. Today we are talking about Forex, foreign exchange. Okay, and as usual, our webinar will be very concise and to the point. And today it will take us about 30 to 35 minutes. And then we will have a Q&A session and we can discuss the market. Okay? Okay, now we go. As usual, our webinar is just about one or two key points. And then I will give you a lot of charts, our observations. You know, we professional analysts, we read the market, we watch the market every day. And we make predictions. Okay, sometimes good and sometimes not very good. And okay, here we go. Give me 30 to 35 minutes. Okay, now conclusion for today's. We're going to see when we're talking about forex market, the king of the forex market is US dollar, USD, right? Long term LT, we see US dollar should be soft. Why? Because the central bank, the US Federal Reserve, has started already cutting interest rates, and it will keep cutting. Remember, keep cutting. Okay. How about the short term? ST short term, we can see that, and we are seeing that the US dollar is very firm at the moment, right? Why? Two key points. One, US economy remains very resilient, and at the same time, we see some conflicts in the Middle East. Okay, we will go through these points coming forward. No worry. Okay, and also we have a once in 4 years party called the presidential election in the U.S., which will take place in less than a month in November. Should be November the 2nd, right? Okay. Okay, are you ready? We go. Now, first chart is a US dollar index chart. Remember, look at this. This is a 5-day chart. Today, for the Forex, I will give you 1-day chart. For this one, for longer term, I give you 5-day chart. What is a 5-day chart? A 5-day chart is meaning that one bar represents the trading of 1 week, 5 day. Okay. Our observation is that sorry. For a long term, US dollar has been trading, in fact, in a range. Okay. And in US dollar index, usually we are looking at very key number. Yeah, you're correct. 100 point. The 100 level is very key. Okay. We keep monitoring it. And back in 2022, 2 years ago, we see a surge in US dollar. Why? Because the central bank, Federal Reserve, start increasing interest rates. And you can see that it increased the rates to a very high level, 5.5 at the maximum, I think. Yeah, 5.5. Okay, so this is US dollar long-term weekly chart. Okay, and maybe some friends are new to this webinar. I can show you that these charts this is price. Okay, this chart, this is price, and this horizontal line, blue one is a private point. Okay, now the price is under the blue horizontal line. It means that for the long term, we are bearish on US dollar. Okay, red one is the downside target. Well, the green horizontal lines are alternative upside target. Okay, and also we have two more charts down below, MACD, RSI. Don't worry, it is not a rocket science. It is just momentum indicators. We use this MACD, we call it MACD sometimes, or RSI, relative strength index, to indicate momentum of the price. Okay, okay, it's easy, don't worry. Okay, now let's talk about the long term. Now we all know that the central bank of US Federal Reserve cut interest rates, start cutting interest rate back in September last month, cut by 50 basis points. It is quite a lot. It is quite a surprise to the market. But you know what? It has been increasing the interest rate. You can see the weight of the acceleration of the interest rate back from 2022. It is a very steep climb. And you can see that the increase was very powerful. And now we expect it has start cutting, and it will be cutting continuously. Okay, this is our view. And okay, how about other central banks? Okay, we have the Fed cutting back to 5%. Now we have the BOE, Bank of England, also back to 5%. And also ECB, European Central Bank, is more aggressive, back down to 3.65. And one central bank against all others is increasing interest rate. It is the Bank of Japan, BOJ. It just increased up to 0.25%. And we will discuss it later. Okay, it is a very interesting story. And we can see that now, except for the Bank of Japan, other central banks, major central banks, are cutting rates. Okay, this is important. Now, in the market, whether it is in the Forex market, in the commodity market, or in the stock market, the people are worried about what? About, hey, and coming to two meetings of the Federal Reserve, November and December, are they cutting 25 basis points, or are they cutting 50 basis points, or there will be no cutting at all? I can be sure there will be cutting. They will be cutting only. But whether it is 25%, 35 basis points, or 50 points, I don't care, because the trend is to the downside for the interest rates. Okay. Why I'm so sure? Why? Look at this one. This is the US debt for the whole country. It is approaching, and it will surpass 36 trillion. It is a big T, 36 trillion. You know what? The national debt for the US is around 130% of their GDP. Okay, and they have to use 15% of their spending, the country spending, to service the debt. Okay, if you are the central banker, you are not going to increase rate anymore to increase the burden of the country, right? So it is quite sure that they will cut, and cut. Okay, and well, speaking about debt for the whole nation, I say that U.S. has the national debt of 130% of the GDP. Japan's debt is 220% of the GDP. In the world, there are some countries have no debt at all, zero debt. Which countries do you know? Yes, Switzerland has no debt, and some other Scandinavian country, they have no debt. For example, Denmark, Sweden, Norway, they have no debt. And also in Southeast Asia, we have beautiful city nation has no debt at all. Which one? Anyone knows? Yes, Singapore. Am I right? Singapore has no debt. Okay, correct me if I'm wrong. I like Singapore. And well, okay, 36 trillion for the US, and it is not easy. It is not easy to service it. As I said, they have to spend 15% of their country's spending every month, every year to service the debt, and increasing. Okay. Now, as I said, people like to worry this and worry that in the financial market. They worry about the 25 points or 50 points or no rate cut at all. And the next meeting, on the next meeting, I can say, as the central bank, that the Fed has started cutting interest rate, just like an aircraft carrier, turning, and there will be the turning is massive. Okay, you are witnessing the turning of the central bank on interest rates, and it will be on one direction only, to the downside, cutting interest rate. So to me, no worry at all. And now this is our long-term view. Okay, we show it as a weekly chart. How about short-term? As our webinar's title today indicates. Okay, we are looking at Q4 this quarter. Now I use a one-day chart. Okay, the bar, one bar represents the trading of one day. Okay, recently we are seeing the strength of the US dollar increase. Okay, as you can see here, we have a downswing, and then we rebound quite strong. And also, the momentum indicators for the US dollar is turning on the upside, quite bullish. Okay, and we are seeing that if short term, the key support is at this level, 100.6. Below this point, we are turning bearish on the short term, but still now it is 102.86 is quite bullish, still bullish, and all those indicators are indicating that the US dollar has further room to go further upside. Okay, this is our view for the current quarter. Why? Why the US dollar suddenly has rebounded so much? To us, two major factors. First of all, economy. In fact, the inflation rate, CPI, in the US is decreasing. This is why the Fed starts cutting interest rate. But at the same time, the Fed has pointed out very clearly that they are also looking at the strength of what? The labor market. And for the past two numbers of this monthly non-farm payroll number, the numbers are quite strong, showing that the labor market is still very resilient. Okay, that's why investor traders they try not to be very bearish on the US dollar for the short term. That's why we are seeing the US dollar rebound. Second, we are seeing, in fact, it is, I can say directly, it is war. We are seeing a war in the Middle East. Okay, Israel against Hamas, against Hezbollah in Lebanon, and also Iran. Okay, and in terms of conflict like this, in fact, this conflict is quite substantial, massive, and trader like to jump into safe haven currency. I can say that US dollar is the safe haven currency at the moment. You agree? Okay, that's why the two factors. That's why we are seeing the rebound of the US dollar recently. Okay, now this is the US dollar chart I showed you a moment ago. V-shape. Okay, we are seeing maybe it could back up to 104 and 105. Okay, in this quarter. And next, I'm going to show you individual Forex currency pair charts. Okay, now first of all, the most dramatic one should be Japan. This is me. Back in May, I was in Japan for a short trip with my family. I visited central bank, the Bank of Japan, in the central park of Tokyo, called Nihonbashi. Okay, beautiful buildings. Okay, and you know what? Then later in July, the Bank of Japan did something unexpected by the market. They increased interest rate, okay, up to 0.25%. You know what? Earlier in the year, they are still in negative level, but in May, end of July, they raised it up to 0.25, and it just triggered a cascade of reactions and mainly the reverse of the carry trade of the Japanese yen. What happened then? We saw the stock market of Japan gave the biggest one-day drop of 12% for the Nikkei 225 index. One day, 12%. Okay, I still remember the day. It was August the 5th. August the 5th. Okay, I show you the chart of the Nikkei here. One day, 12% from the Nikkei, and it triggered a ripple effect around the global stock market. At that night, okay, August the 5th, we saw the US stocks also tumble to the downside. And this is Nasdaq 100 index test stocks. Okay, at that time, it at the open, it dropped 5%, but at the end of the session, it worked its way back up. Well, if you follow our webinars, follow Phillip Lover, follow Trading Central, follow my webinars, you will know that I am persistently bullish on US stocks. Okay, I regard this as a very good buying opportunity at that time. Okay, and these opportunities do not come very often, but it did come in August the 5th. We talk about it later. Okay, so this is the result of the BOJ, Bank of Japan, increasing interest rate. Okay, so currently, what now then? We have a new Japanese Prime Minister, Ishiba, and he said recently he visited the BOJ and say, you know what, we are not going to interfere with the central bank's policy, but I personally think that the economy is not ready for further rate hikes, right? And the Bank of Japan chief, yeah, we are just kidding, right? No more interest rate hike, okay? And I'm quite sure that for certain period of time, we are not going to see another hike in interest rate for the Japan, okay? Now, Japanese yen. And this is the dollar yen. Okay, with Japan US dollar against Japanese yen, we usually call it in the market we call it dollar yen. Okay, we see of course the US dollar rebound, and of course the momentum is very good, still very good. I can say. Okay, we still have upside in dollar yen. 153, 157 could be a thing. However, for every currency pair, we have certain key level, okay, for certain period. For dollar yen, we see that the key level currently is the 160. It will trigger the authorities to do something, whether to interfere or to talk up or down the yen, something like this, at this level. Okay. 160 is a very sensitive level for the dollar yen. But currently, if you ask me for the rest of this quarter, I can say that dollar against the yen, dollar yen still have some upside momentum. Okay, upside room. Okay, so this is dollar yen. Okay, now back to the our experience with our webinars. If you follow our webinars, you know that I remain very bullish on stocks market, on the US stocks, just for one reason, global liquidity. Okay, I show you this chart to let you know that we are now currently seeing the global liquidity increasing. It is global M2 by the central bank, okay, by major central banks around the world, increasing, okay, and that will be beneficial to risk asset, including stocks, including gold, and also Bitcoin. Now, allow me to share with you my observation also in gold and Bitcoin. Okay, they are marginally called Forex, okay, foreign exchange, but when we talk about US dollar, I think I'm responsible. I have responsibility to talk about also gold and Bitcoin. Okay, gold. Um, Gold has just hit an all-time high at 2,685, about here. Okay, at the end of September. Okay, very good shape for the whole year. However, I have to give you a little bit warning here because the momentum indicators are not looking good. What does it mean? It means that there is a consolidation going on. We could see some more consolidation of gold price. Okay, we are still bullish on gold, but we have to keep our parapon firm here at 2,520. It is around the 50-day moving average and also the lower Bollinger Band. Okay, whenever gold price drop below this bull line, 2,520, we have to be stop being bullish on gold on the short term. Okay, so be careful on this one. In fact, gold has been up for 32% for the whole year to now, and to me, it is quite normal to have a consolidation period. Am I right? And how about gold's little brother, silver? Yeah, same. We are seeing quite a consolidation for the past several sessions. Okay, our key support is here, 29 US dollar. Okay, then how about digital gold? What is digital gold? I mean Bitcoin. Okay, well, we can regard it also as a currency, right? Digital gold, Bitcoin. Okay, record high 73,000 back in March this year, and after that, it has been undergoing a 6-month consolidation. Now, this consolidation 6 months is very long. In technical analysis, whenever you see a consolidation that long, after this consolidation, the breakout, whether it is up or whether it is down, the magnitude will be huge, will be massive. Okay, so what do you think? What do you think? You think Bitcoin will be up after this consolidation or down? Okay, so today I'm the speaker. Let me say something. I expect it to be up, but for some regulatory issues, we are not going to give targets. Okay, price target for Bitcoin. In fact, I have no price target for Bitcoin. Okay, it is a new thing, and when it is up, it will be up a lot. When it is down, it will be down a lot. Very volatile, so be careful. All right, this is Bitcoin. I showed you this chart again, global liquidity. Okay, again, remember it is rising. Global liquidity is rising, and it will be good for what? For risk asset. Now, I know today we are not talking about the stock market, which I talk a lot about in the past webinars, which you can check on the Phillip Lover's website, YouTube website, something like this. And let me talk just one slide on stocks. Now, with rising global liquidity, we are seeing a rising stock market. So I am still very bullish on US stocks, particularly tech stocks. Okay. In fact, as I repeat that we have already marked a low, a bottom back in 2022 October. After that, we are on an uptrend. We just have consolidation, but the uptrend is still intact. Okay, back to Forex. Euro Euro against the US dollar. Well, as far as I know, inflation in Europe, particularly Germany and France, they are coming down fast. Okay, and you can see that the ECB, European Central Bank, is cutting interest rate very fast. Also, Euro, this is a very classic technical analysis. Double top. Can you see that? Double top at the level of 1.12 against the US dollar. So we are bearish on this one, downside target here. As you can see, the momentum is also turning down. Okay, there's no upward momentum at the moment, and we could not be bullish on euro at the moment. Okay, is it easy to understand? All right. British pound against the US dollar. British pound in market, another name, we call it cable. Okay, it is very marginal. And just a few days ago, we are still a little bit bullish, but we keep the key support at 1.299. Across below this level, we turn bearish immediately. Okay, just a few days ago, the Bank of England chief Bailey, he said we could be more active to cut interest rate, and that's why you see this black candle on that day, and it remained on the downside. Okay, you see, central banks, around major central banks, they are very active to cut interest rate, and for me, there's no worry about that, or there's no worry about central bank not cutting interest rate. Okay, they will cut it very aggressively. Okay, so Australian dollar against US dollar, we call it Aussie for Australian dollar. Same issue here. Same issue here. It has crossed below the red line is 20-day moving average, blue line 50-day moving average. It is not a very good sign. Okay, we keep our key support here. Below this 0.664, we will turn bearish. Okay. Now, how about US dollar against the Canadian dollar? Canadian dollar, we call it loonie. Okay, and there is a key level. Just like the dollar index, we have a key level at 100, and dollar yen, we have a key level at 160. In US dollar against the Canadian dollar, we have a key level here, 1.36. Okay, you can see that support and resistance, okay, it has broken it to the upside, and we are bullish on the US dollar against Canadian dollar. In other way, we are bearish on Canadian dollar, right? This is also a very classic technical analysis. This is what, can anyone tell me? Before we have a double top at euro, and now this is a double bottom at this pair. Okay, when there is a double bottom, it means that the price reverse to the upside. Okay, we are seeing a double bottom at the US dollar, Canadian dollar, and also you can see that the momentum indicators are pointing to the upside. Okay, still have upside to go for US dollar against the Canadian dollar. Okay, you get that? What's next? Singapore dollar, US dollar against Singapore dollar. Now we have a good one for the Singapore dollar. I mean, the Singapore dollar was very strong for the July, August, September. So, and recently we see the rebound in US dollar, and also this pair also rebound. Okay, I show you this number. This is called Fibonacci retracement. We retrace, usually we locate some key level using this Fibonacci retracement number. This number 61.8 is usually used. Okay, we say that it could rebound to, of course, it is a prediction, right? Back to 1.33. Okay, and also you can see that we have a very good rebound also in momentum. Okay, no weakness in this pair at the moment. Okay, if you are bullish on this one, we have more upside to go. You can see. Okay. Okay. Now I think you are also very happy to see that the Chinese stock market surged recently, and of course yesterday it tumbled, right, after 10 days rally. Okay, and also in the Hong Kong's Hang Seng Index. Okay, and a quick reversal. And what is happening? The Chinese government is going to inject, as I said, liquidity back into the market. As you can see here, central bank is going to put out somewhat monetary policy, aggressive stimulus, okay, to help the market. And I remember yesterday, on Tuesday, 2 days ago, we have the NDR, National Development and Reform Commission, something like this. They also announced some stimulus measures, and I can remind you that maybe 2 days later, maybe next week or so, we have a Commerce Department coming out to give another set of stimulus measures. You can see that the whole Chinese government is very hard at work to pump out liquidity. Now, if a government pump liquidity, its currency should not be strong. Okay, that's why we are seeing that US dollar against the yuan, offshore yuan, CNH, is rebounding also. Okay, for this pair, the key level is 7. Always we talk about up above 7 or below 7, something like this. We are seeing that US dollar, just like US dollar against other currency, is rebounding against this offshore yuan. If the government, Chinese government, keep pumping out more measures to shore up the market, okay, to help investors, we should be seeing a weakening of its currency. Okay, so that's why we are seeing here more upside to go for the US dollar. Okay. All right. Now, the last point is that many people are talking about U.S. election in November, and it is a very interesting point to talk about because these two rivals, all right, I try to read their interviews, watch their interviews, see their point of views, something like this. I can say that Trump is anti. He hate strong dollar. Okay, he always say he wants a weak U.S. dollar. Okay, and sometimes he says something like he will fire Jerome Powell, the chief of Federal Reserve, if he is elected, because Jerome Powell he increased interest rate to 5.5%, too high for all the business. Okay, you know, Trump likes to fire people. At the same time, a side note is that Trump has turned his standing on Bitcoin. Now he is supporting Bitcoin. Okay, and you can take this as a reference as the election go forward. Regarding Kamala, I have to say I'm sorry. I try to I watch her interviews. I read a newspaper article about her, but I'm sorry, I cannot figure out what she's talking about most of the time, and that's why let's see. Okay, let's see. And in fact, the dollar, we see the dollar to be soft on the long term. And this is our theme for today. US dollar, soft for the long term, and for the short term, just like the Q4, the fourth quarter, could be still very firm. Okay, thank you. And let's discuss.
Well, thank
Any
you,
question?
Ming. Thank you, Ming, for the question. So we do have quite a number of attendees tuning in online. Do we have any questions at the moment? Because Ming spends his days in the office looking at charts, so he is the best person to answer any of your questions regarding any questions you have on a specific pair, on what are his thoughts on a specific contract. So he is in a very good place to answer that. We do see that there's a Tom. He raised his hand, but would you be able to write down your question? I think there's a question box in this GoToWebinar app. So if you write down your question, we'll be able to read your question and respond to it. Right. Anyway, in the meantime, while we collect your questions in the questions box, Ming, I want to ask you a question. So, what do you
Yes.
think about the CPI that is going to be released in another 45 minutes? What do
Wow.
you think? What do you expect? Any short-term outlook?
I expect it to be on the downside, to be on the downside. After COVID, at the COVID, we saw the CPI up surging through the roof, and that's why afterward the central banks increased interest rate. But after all these are settled, we are seeing the coming down of price. I think currently the price of shelter, they say shelter, that means the residential place is holding firm, but I also see some signs of easing. And oil price, oil price seems not to be a concern. Of course, recently we have some uptick from the Middle East conflicts, but on the whole, it is coming down. So I don't think the CPI inflation will boost the interest rates again. So in fact, we should be looking at the labor market instead, as I mentioned in the webinar.
I see. Yes, yes. But yeah, I noticed that the market, this few days has been rather choppy. I was trying to look for any shorter term trading opportunities in the major forex pairs. It is pretty choppy, and if we trade, we would actually prefer when the market has a clear trend. But I think starting today, we are starting to see the dollar, strengthen a little bit. We see the euro dollar sliding down. We see the dollar yen rising up, and we also now I think looking at the charts in real time, Aussie dollar, it is also coming down. So the
Mm,
signs are pointing towards the dollar has been strengthening leading up to this CPI data.
yes.
Yeah, so beyond this CPI for tonight, like in the next 2 weeks, is there any uh, interesting event that we should be cautious about? I mean,
I think that in fact, the investor and traders, they are looking at the November Fed meeting. Okay, they
November
are
Fed meeting.
talking. Yeah, November. We have one Fed meeting in November, and the last one for this year in December. Two more meetings, and the Fed chair has pointed out quite clearly recently that uh, they are going to cut, sure, but they are going to cut 25 points each meeting. Okay, and that's why you are seeing the strength of the US dollar. Why? Because we cut 50 points in September. Okay, if you are going to say, oh, we cut 25 points back in November and then 25 points in December, oh, maybe you are not aggressive enough. And this is why we are seeing the current strength of the US dollar. But my point is, as I pointed out in the webinar, uh, long term, going forward, it should be done. The interest rate they are cutting, okay, and you can see at some point they could cut 50 points also in case of emergency, something like this. So get prepared.
I see. Yes, thanks for sharing that, Ming. We do have a few questions in the questions box, but before we move on to the question, I just like
Yeah,
to give a gentle reminder to our listeners today, that although it is exciting, we have the CPI data coming up, but generally we also advise cautious to our clients, ahead of these events, because when the results come out, they could be, they could whipsaw. That means they could rise up very sharply, and then after that, they could decline very sharply as well. So many a times when some traders, they try to place trades right before this event, they set a stop loss. It may hit their stop loss and run the other way, or even it may be according to the same direction, but the market moves so fast, you end up having suffering from a slippage, yeah, because the market is moving so fast that you end up entering. So let's say if you're entering a buy order, you end up getting filled at a higher price. And yeah, so it is, we advise cautious in this, and when trading ahead of such high impact event, right, we advocate for risk management. So just to put the message out there. Okay, yeah, so now I think we do see a few question. Hold on, let me read out some of it from the floor. We have from one attendee, is that how would the BOJ action plus the US election affect the buying and the selling pressure, and would this create a ranging price action? So to read again, the question is, how would the BOJ action uh, with the US election, these two combined together, affect the buying and selling pressure? So I assume this is pertaining to the dollar yen lah.
yeah, dollar yen, dollar.
Yeah,
Um, well, you know what? We investor and traders say that the BOJ is is a group of quite interesting central bankers, and sometimes they make a move that uh, surprise themselves and also the market. Just like the move, they increased interest rate back in July. And as I mentioned, Japan's national debt is 220% of the GDP. And you know what? The central bank purchased almost all of the national debt. Okay, and after July, the episode of July, and also the market crash in early August, August the 5th. I do not think the BOJ will have the courage to to raise interest rate again. Okay, and regarding the election, I think the U.S. dollar has the policy of on U.S. dollar is not very much set by the president. Okay, and the central bank, I mean the Federal Reserve, has a bigger say on the U.S. dollar. Okay.
I see. Okay. So we have another question. If Kamala wins the election, do you think the USD will be strong or weak in the short term? And he's asking if he should go long or short. Hi, Tom. May I answer? I think this question, honestly, on behalf of Ming, I think is a bit difficult to advise in the short term, because short term it's affected by many factors like the CPI
Yes.
tonight, like
Well, I can
jobs
say
data.
something about this.
Yeah. Yes.
As I said, the lady Camilla is quite interesting, and almost well, I cannot fully comprehend what she's talking most of the time, and also in the field of finance, also in the field of investor traders, we all say that if Camilla is elected, if okay, if is so that this country is a little bit weak, and that on some way could affect the U.S. dollar. Well, in a very short period of time, maybe. This is our take on this one.
Okay, thank you very much, Ming, for your
Yeah.
sharing. We do have, we are limited by the time that we have today. The session will be ending in 4 minutes. So thank you for participating in the Q&A session, dear audience. Okay, so right now, in the interest of time, may I just move on to share with you a few slides, just to conclude this sharing session today. But of course, the time that we have today here is pretty limited. Going forward, if you have any questions, feel free to write in to us, or have an appointment with us in our office. We'll be happy to have a chat with you, dear audience that are online today. Okay, so right now, just let me quickly share a bit about what we offer here at Philip Nova. Okay, so today, earlier in the session, we shared about the Phillip MetaTrader 5, which is our go-to platform for trading FX and CFD. Okay, so one of the reasons that this is so attractive is because this is a fully zero commission trading platform. Forex, precious metals, and share CFD. Very importantly, you are able to trade that with zero commission on this trading platform, and also you are able to trade global indices CFD from a micro lot 0.01. So this is basically allowing you to trade with a very short, very low barrier of entry. Okay, and right here today, we would like to share with you there is this account opening promotion, whereby those of you who are yet to be our client, we welcome you to join us by opening an account. So if you open an account today, you scan this QR code, you submit an account opening application, you'll be receiving $20 trading credits. Okay, just by scanning this QR code right now and completing the account opening submission, you'll be entitled to $20. Okay, the next step is if you funded funded $1,000 by next Wednesday, which is 16 October, and then subsequently place 6 trades by the end of the month, you receive another $80 trading credits. So in total, you stand to receive $100 of trading bonus from us if you open an account today, and then also to fund and subsequently place 6 trades with no minimum lot size by the end of the month. Okay, you could snap this picture because we will be ending the session soon. You can snap a picture of this QR code, and also there is a short link of the terms and condition of our trading promotion that we have here. Okay, so just a reminder, those of you who are yet to be our client, we welcome you to join us and to enjoy the perks of trading on this platform. Okay, we do see a few more questions coming in. We hear you, and we'll be following up with you in the next working day with regards with your queries. Okay, and with that, thank you very much, Ming, and thank you very much, our dear
Thank
clients
you.
who are tuning in today. We hope that we've all benefited from Ming's sharing, and we hope that we can have a profitable remaining of the year ahead. Okay,
Thank
all
you.
right, have a good evening, everybody. Okay, goodbye.
Goodbye.